Hi traders, this is Senior Account Manager Adam Howes hosting the Daily European Open webinar for this 14th of the 9th, 2017. Just a short general advice warning before we begin. The following education session is not to be treated as personal advice. ForexCT provides general advice only that does not take into account your objectives, financial situation or needs. Trading FX and CFDs involves a substantial degree of risk and should only be undertaken with risk capital. Investors do not own or have rights to underlying assets. Okay, so we'll just take a quick look at the economic events that have shaped the market so far and the ones that are occurring for the rest of the week. Just go to weekly view. Then obviously go to our time zone here in Melbourne. Okay, so this morning we had the AUD employment change and unemployment rate figures being released at 11:30 a.m. We had a 54.2k increase in actual jobs as opposed to the 20k forecast, and unemployment rate holding at 5.6% against forecast of 5.6 and the previous being 5.6. So the market did respond bullishly on the AUD because of the huge amount of jobs numbers created. 54.2 against 20k is quite an impressive result. Interesting to see the split of that between full-time and part-time. Predominantly it would have been more a full-time, which is a better indicator about, sort of the economic stability of the Aussie economy. If we've got more full-time jobs being created, then that suggests that, obviously the full-time incomes support paying mortgages and so forth and indicate, better consumption in the economy. So a better full-time indication is taken as a bit more seriously. We have the CHF interest rate announcement at 17:30 today, along with the very important Great British Pound Bank of England rate decision occurring at 9 p.m. tonight, Australian Eastern Standard Time. We have the Consumer Price Index for the US dollar at 10:30 p.m. Tomorrow we have advanced retail sales at 10:30 and consumer confidence coming online at midnight on Saturday. So obviously the big one that will be watched tonight will be the the Pound Bank of England rate decision. We had earlier figures released on Tuesday, where the pound actually spiked up massively on a better than expected CPI reading. And we said before that better CPI lends itself to increasing interest rates over time, 2.9% against 2.8% forecast and 2.7 against 2.5. So that may give some impetus for the Bank of England to consider raising rates. It is forecast that they're going to actually leave them on hold this time, but there will be a short speech afterwards from the key members about the likelihood of future rate increases in terms of how hawkish or dovish all of the members are going to be of the board in terms of the urgency of raising rates. So if they're more hawkish, they'll be looking to actually raising rates with a little bit more urgency, and obviously dovish being, sort of raising not that much urgency around raising rates. Now, a higher inflation reading gives the Bank of England sufficient credibility to probably consider raising rates. 2 out of 8 members actually voted hawkish last time, so we might see more members than that. And if indeed that does occur this time, then we might actually see sort of the pound spike up on that announcement. So it's a very key one to watch. US inflationary data has been pretty disappointing of late. There has been some lackluster performance on the inflation data. Keeping inflation low is important, but obviously if it continues to be low, then again, it places pressure on the respective monetary board, being the Fed in the US, to actually lower rates to, prop up the economy and make sure price stability is kept in check. So obviously if there's a less likelihood of raising interest rates, then it's a little bit lackluster for the US dollar and not having a high value attached to it of interest. Again, we've got retail sales and the consumer confidence to support, the implementation of future rate increases as well. So going to the trading view charts, obviously we have daily timeframes across the board on the usual pairs that we look at on the AUD, Euro and the Pound against the US dollar, USD against the Yen, gold, oil, Pound against the Yen, and the ASX 200. Just go into the daily technical report from today and just give you a few sort of forecasted figures on the intraday basis about where we're looking at. We have long positions preferred on the AUD USD with targets of 80.45 and 80.60 in extension. On the SPI 200 ASX, we have short positions preferred with targets of 5720 and 5703 in extension. The Euro, the downside prevails with short positions preferred to 1.1835 and 1.1800 in extension. Great British Pound, we have 1.3180 and 1.3150 short positions preferred. The bias remains bullish on the US dollar, Japanese yen with targets of 110.90 and 111.30 in extension. GBP against the JPY has long positions preferred with targets of 146.65 and 147.30 in extension. Gold has short positions preferred, targets of 13.16 and 13.08 in extension. Finally, capping off with oil, targets or long positions preferred with 49.85 and 50.35 in extension. So obviously the one to watch, folks, will be the British pound. Bear in mind that the preference was sell today on the intraday, but obviously if we see some more hawkish comments from the members, even if they keep the rates on the same, but more hawkish comments from the members, then it could transpose into more bullish activity for the pound to ensue with a higher expectation of raising rates. If you have any questions about those setups in general, anything about the daily technicals or the economic announcements discussed, then please get in contact with your account manager at ForexCT and be more than happy to assist you. Thank you very much for your attendance, and for the time being, goodbye. Thank you very much.